Hi and welcome to this live currency strength indicator table video with me, John, on this Wednesday, the 20th of September. Today is the big day. We have lots and lots of data coming out today. The big one coming up this evening, the FOMC statement and the Fed interest rate decision at 7 p.m. this evening. We've already had some data out this morning. We got some data out of Japan, China, and the UK. CPI data coming in a little bit lower for the UK. Pound has still continued to remain weak, so there is still maybe some opportunities. I have set an alert on Pound Aussie, which we can take a look at in this video coming up shortly. Now, just to go to the currency strength indicator table, we do have a full board today, including Pound as the weakest currency and CAD remains as the strongest currency. Now, whether that continues to remain is a different question. I have taken a look across the board this morning. CAD Swiss has set up with our I would say strategy setup. There are some kind of parameters around that though, so I'm going to explain those as well. Aussie Swiss has also set up, but I haven't taken a position on that one yet, just because it didn't have that same look to it as CAD Swiss did. I actually like a little bit lower prices on Aussie Swiss first, and that may happen with CAD Swiss as well. Hopefully what will happen is either we'll get triggered and it will continue with the momentum that we're expecting, or we'll get a pullback even further, and then we can maybe look to reposition ourselves in that one. You can see the market is in a little bit more risk on at the moment. The yen, one of the weaker currencies against the likes of what we call, say, risk on assets, which would be CAD, Kiwi, and Oz. Yen really is the one that does define risk though, coming in as a weaker currency at this moment in time. So let's flick over to some charts of interest. I'm going to start off with Aussie Swiss. Aussie Swiss is going to feature as the chart to watch. The reason being is because we're getting a similar price action to what we had previously. I just would like a little bit more of a pullback. Now, looking at the weekly chart, I think we explained this in yesterday's video, but we are in a strong downward weekly trend, okay? And then when we're looking at that weekly trend, we're kind of looking at the phases in the market. You know, we have a primary phase here, secondary phase, primary phase. And it's quite clear and evident that we're in the secondary phase right now. Now, if this overall downward trend is going to continue, we'd like to look at areas of resistance where price may come towards for turning points. Now, that turning point we've put in is around about the 0.5850 area, which were these lows in here, and that's the area I like the look of for price to come into before either continuing that downward trend or trading through that and heading to the next level of resistance, which would be near this 0.62 handle. Now, does it mean that price is going to get there? Absolutely not. Obviously, price could fall from here. We've got to understand that we are in a stronger downward trend here. So it makes it a little bit tricky for a trading opportunity. Now, looking at the 4-hour time frame, we've got a nice trend set up. The market is making higher highs and higher lows. If I was actually just to put in a trend line here, I'd probably go in and around this low here on the 13th of September, connected to the one on the 18th to expand that out. The reason why I'm doing that is because if we go further down and try and expand that to say, let's say here, which is the low starting from the 5th of September and the low on the 10th of September, we're not really anywhere near that at the moment, so I'm not worried about looking at that potential move. What you can see though is that I've placed minor trend line resistances going against the trend. So this one, for instance, going against the overall market trend here on the 4-hour, again going against resistance, again going against resistance. So what I'd like to look for sometimes is when price trades out of that minor resistance zone, how does price react? And you can see here we rally quite aggressively. Recently we did rally out of that, but we have consolidated, and again we're getting a similar pattern. So I do really like Aussie Swiss upside here. The only thing I would like to have seen is a little bit of a deeper retracement phase, because we've got the 51-hour moving average running through here. I like this consolidation zone through there as well. Consolidation zones are good. I like the idea that price trades within a consolidation. We've got buyers and sellers trying to find fair value buyers a win, and we've pushed out. So I like to see price retest these kind of areas before going again. So that's what I've kind of mapped in here. Can price come back and retest? That's why I've got an alert at the 57.80 handle, looking to see if we get a retest. Obviously there was a setup this morning, so if I look at it from a stochastic point of view, you can see here around about 6 a.m. we got sort of a pre-signal, 7 a.m. we had the full signal. So if I was to look at that just on its own and not take into consideration strength, weakness, and what we sort of anticipate, then I would have been looking to get long around about 57.98 and looking to target up towards that 58.50 area. And then this is where my kind of concern comes in for Aussie Swiss. I don't know where to place my stop, because if I place my stop below the natural area that my eye is drawn to, below this swing low at 40 pips, then we're way out of the ATR range anyway. But my risk to reward ratio diminishes quite substantially. If I went below these previous lows, great, we've got a 4.5R trade, but I run the risk that price comes back down towards that 50 moving average before then continuing to the upside. And then when I look back at recent price action, price has tended to sort of hug that 50 on the way, you know, so there is sort of cause for concern that if I was to enter like right here, right now, or entered on that sort of strategy setup there, then I'll run the risk of getting stopped before the price even starts to take off. What could happen, or what I think would be an ideal situation for us, is that price maybe finds a little bit of resistance here. We pull back down into that area there. We've got lots of support with the multiple different support points. We then trade back to the upside. I can place my stop safely here, have a good risk reward ratio. That's my sort of feeling surrounding this market at this current moment in time. So hopefully that makes sense. Obviously, if you're looking to get involved with this market, and you know, that's completely up to you how you get involved with it, but that's what I'm going to be looking for. Now I have placed a entry on CAD Swiss at 66.80, so if I just put this in 66.80 there, looking to see if price will find momentum to the upside here. Now CAD Swiss very similar, we were looking at this weekly, looking to see can price kind of come back into this sort of lows in here. It's actually a little bit clearer on the daily chart. You see this consolidation up there. Can price come back into that consolidation? We had some good data out of Canada yesterday, so that could fuel a bit of price movement to the upside. Looking at the 4 hour as well, look at these retracements, very shallow retracements, so we know that this is a strong upward trend. On the hourly then, if we look at the sort of stochastic here in line with price, you can see that we've recently sort of made a new low on the stochastic, and we've come back above the 20. So that's the reasoning behind the entry. I can get the stop loss below this little low here as well, so I feel like it's a little bit safer. The only concern I have, again, with this market, just to kind of put a little bit of a caveat on it, I have got a trend line from the low in the 8th of September, kind of going all the way to the sort of 18th of September, because it visually kind of adds these little bits in here. We have had a trend line test as well. My only sort of concern is if we actually just move to a little bit more of a higher time frame, this 4 hour for instance, is that the 4 hour prior highs are here where our alert is set at 66.40. That's what I don't like. I like sort of looking at higher time frame structures, so that to me draws my attention with my eye to then look for that move. So if, let's say, this doesn't trigger, you know, if it doesn't trigger and price falls here, then I think we've still got options to get long in the near future. If we get triggered though, obviously we just have to manage that as, you know, price moves. So CAD Swiss, looking at that one. Pound Aussie, I've got an alert set at 1.92. Obviously, we were looking for shorts in here previously. If you did manage to trade that, you're a very happy person right now. And if you held it, we've traded through 1.92. I've set an alert at 1.90, 168. 1.92 is also fine. We've got trendline resistance coming through here. We've got prior support and resistance on this 4 hour time frame. daily has potential to move lower. We've got potential to come into the 1 spot 90.50 to the 1 spot 9 area. So that's what I'm kind of looking to target here on pound Aussie now. If we get a pullback, great. We can look for an opportunity. It would have been a nice move there at 6 a.m., but I wasn't looking at the chart at the time. So yeah, but if we get another kind of similar situation like that, that could work in our favour. So I'm going to leave that there. Obviously, there is key data out today. Just be aware that, you know, we have got that FOMC rate statement and things like that going on. So that's why I've only set a 50% of my usual risk. So 0.5% of my usual risk, because we know that these markets can sort of move aggressively, even if the news is not really connected to the actual chart of interest. You know, CAD Swiss shouldn't be affected too much by the FOMC, but it probably will be, and we probably will see that volatility. So that's the reasoning behind that as well. So hopefully that will make sense, and I'll catch you in the next video.